Good, good morning, everyone. My name is Lisa Padmore, and I am a partner with Ernst & Young Caribbean and a member of the IFAC board. And it is my pleasure to welcome you to the second day of the 38th conference of the brief delay. But once we got going, folks, we really got going. And for those of you who are regular attendees of the ICAC conference, the conference usually begins with our flag ceremony, and we really try to recreate that with the photo montage of the past conferences and introduction of the members of ICAC and their presidents. Our speakers really stayed true to the conference theme, envisioning the future and managing our reality. From our keynote address to the contribution from Henry Mooney of the IDB to Dr. James Fletcher, we had a good range of themes and trends that can impact the markets and islands where we all practice our profession and inform how professional accountants in the Caribbean should retool themselves for the future. And finally, we saw the passing of the presidency from Mr. Khalil Ali to Mr. David Simpson. And on behalf of the Caribbean accountancy profession, we want to thank Khalil for his service, not only as our president, but also for his many years on the board of directors of the Institute of Chartered Accountants of the Caribbean. And to you, Mr. Simpson, we wish you a very successful presidency and assure you of all of our support. Ladies and gentlemen, our conference is not possible without the support of our sponsors. Platinum sponsor ACCA, gold sponsors EY and PwC, silver sponsor CIPFA, and bronze sponsor CPA Canada and Deloitte. Thank you so much for your support. So let's jump straight into our first session for the morning. And we will have a contribution by Todeu Cendon, who has been a member of the International Accounting Standards Board since 2019. He's been a partner with PwC Brazil for over 30 years. He is a director of the Brazilian Institute of Independent Auditors and a member of the Commission for Continuing Professional Education of the Brazilian Federal Accounting Council. Todeu is going to bring to us his thoughts on the future of corporate reporting, and we hope that you will find his session informative and instructional. Welcome, Todeu.
Thank you, Lisa. Thank you very much. 1 second here, and then I can start. Can you see the presentation? Thank you. Yes, I think so. Can I? Okay, excellent. Thank you very much, Lisa, for the introduction. Good morning, everyone. It's a pleasure to speak at this 38th Annual Caribbean Conference of Accountants. Thank the Institute of Chartered Accountants of the Caribbean for the invitation, and I wish this is a very productive conference. I would like to be physically in the Caribbean, but unfortunately, that's not the case because of the pandemic, but maybe the next chance I'll be there. In line with the theme of this conference, envisioning the future, managing our reality, I would like to talk about some of the projects in the IFRS Foundation that might have major impact in the future of corporate reporting. If you have questions, I can take them by the end of my presentation. As this is already the second day of the conference, I suppose that you all are already experts in the platform. And so I think that Lisa has already explained that one. Just please include your questions in the proper field, and I'll try to answer as many as I can by the end of my presentation. Second here. Okay, my presentation, I will start describing the main current projects underway at the ISB and IFRS Foundation. Based on this list, I selected 4 of these projects that I believe might have a major impact in the future of corporate reporting. And I will provide a bit more details about each of these 4 projects. Oh, 1 second. Can you see that now? Okay, good. Sorry about that. Okay, just telling what is in the agenda here. Just give you overview of the documents that the foundation has in consultation, and then I have selected 4 of these for discussing that I believe has a major impact in the future of corporate reporting, and I will provide a bit more details about each of them once I start these slides. Okay, does it change now? It's okay. Yeah, okay, thank you. Let's start with a list of major projects currently in the agenda of the IFRS Foundation. Actually, we can split these projects into 2. There are projects we are currently asking for feedback, with most of them, if not all, with a document currently open for comment. That are those you can see in the slide. And there are also projects we have already asked for feedback, and we are now in the redeliberation decision phase, which is the case, for example, of the project on the primary financial statements. I'd like to focus on the projects open for comments because it includes those projects I believe might have major impact in corporate reporting. That's, of course, is my personal view. As you can see in this slide, there are many documents out for comment. They are indicated in this slide with different colors because they are projects in different phases. The blue ones are those in research phase. This is the initial phase of a project where the board is gathering evidence about the problem to be solved and assessing whether a feasible solution can be found before starting a standard setting project. The red ones are the standard setting projects themselves. Basically, this is the phase when the ISP has enough evidence to carry out a major amendment of an existing standard or even issue a new standard. Usually, it starts with an exposure draft, and then we have the amended or new standard finally issued, depending on the feedback from the consultation process. The gray ones are related to the strategy and governance of the IFRS Foundation. Of course, these are just some of the projects the IFRS Foundation have. We have many other projects, usually narrow scope projects, but let's focus on those that are the bigger projects. For example, business combination under common control. These transactions are out of the scope of IFRS, and therefore, with this discussion paper, we intend to gather information and evidence as to whether we can fill this gap and give investors the information they need without imposing unnecessary costs on the company. We have here 2 post-implementation review projects, one on group accounting, covering IFRS 10, 11, and 12, and another on IFRS 9, covering part of the standard on financial instruments. The objective of a post-implementation review is to assess whether the standard is working as intended. We have a project on rate-regulated activities. It is an exposure draft, and basically the proposal is to require the recognition of regulatory assets, liabilities, income, and expenses in certain circumstances, and will replace IFRS 14, which is a temporary standard. We have these projects on subsidiaries that are SMEs, small Indian entities. The purpose of this exposure draft is to propose to allow these companies that are subsidiaries of parent that applies IFRS standards to apply IFRS standards, but with reduced disclosure. And with that, try to reduce the cost of preparing financial statements for these companies. Okay, and then you have these other 4 projects that I have circulated, marked there. Target the standard level review of disclosures, management commentary, agenda consultation, and amendments to the IFRS Foundation Constitution, which is related to the formation of a second board in the IFRS Foundation, a sister board of ISB to deal with sustainability reporting. Why have I selected them? As I said, because I believe these are the projects that, my view, might have a major impact in the future of corporate reporting, and will give you in the next slide a bit more details of each of them, and then you may or may not agree with my selection. Let's start with the targeted standard level review of disclosure project. The exposure draft was issued in March this year, and the period open for comments ends on 21st October. This project is all about improving the disclosures in the financial statements. To do that, the board wants to improve the way it drafts the disclosure requirements. I think we can divide the exposure draft into two parts. One part is the guidance itself, how to draft the disclosures, and another part is the application of this guidance, what we call pilot approach. In the first part, it is proposed a guidance that would help improve the board's approach to developing disclosure requirements. Basically, it is a new approach or how we draft the disclosure requirement in each of the standards. The idea is to require companies to comply with disclosure objectives that can only be met by applying judgment. Get rid from the disclosure checklist approach. The information must be meaningful. Prepared disclosure in the financial statements is primarily a materiality judgment exercise, not a compliance exercise, as it seems to be the most common approach today. IS1 already requires this exercise, but the way disclosure requirements are written in each of the standards does not incentivize this exercise. In practice, this overarching requirement in IS1 is not applied at the level of each of the standards. We are proposing to bring this requirement right in the standard, including detailed disclosure objectives and explanation about investors' needs. With that, we believe we could give companies more tools to help them, management, apply effective judgment when looking at the disclosure requirements in the individual standard. And as I said, the second part of the exposure draft, the pilot approach, is related to the application of this guidance in practice. We are testing this guidance in two standards, IAS 19, employee benefits, and IFRS 13, fair value measurement. In these pilot projects, we are replacing the disclosure requirements in these two standards with a new set of disclosure requirements developed applying the proposed guidance. Summing up the proposal, materiality judgment will take the first place, and with that, we will have better financial statements in the future. Moving to the second project I marked, management commentary. This is actually the review of our current IFRS practice statement number 1, management commentary, issued in 2010 to provide a comprehensive framework for preparing management commentary on financial statements. The exposure draft was issued in May this year, and the comment period ends on 23rd November. This project is part of a major ISP initiative, Better Communication Financial Reporting, and it has a focus on information needs of investors and creditors. And this project works well with 3 key areas of interest, especially for investors: better information about ESG matters, intangibles, and long-term orientation. Firstly, the growing attention on ESG matters, and in particular, consideration of environmental and social factors. There has been a very significant growth in ESG or sustainability assets managed by the investment industry, increasing these factors where material are also being integrated in decision-making process of mainstream investment managers. Secondly, investors are seeking better information about intangible assets, and specifically those that don't meet the recognition criteria in IFRS standards. I mean, they are not at the balance sheet. Intangible assets, including brands, customer relationships, workforce, network effects, know-how, corporate culture, have become a significant generator of value creation for corporate sector. Investors devote time and resources to better understand the returns and risks that intangible assets contribute towards. The revised practice statements consider material, environment, and social matters and intangibles, capture information about these as management set out the entity's business model and strategy, its resources and relationships, risks, and the impact of the external environment. In the third area of interest, long-term orientation, actually the two first areas of interest also affect the long-term consideration of an entity's prospects, as it considers material sustainability matters and certain intangibles such as know-how, people, and culture. There is a growing interest for investors to see within the management commentary discussions on matters such as systemic risks or strategic challenges that could affect the entity's long-term prospects. The revised practice statement reminds preparers that investors and creditors need information that provides insights into factors that could affect their assessment of an entity's ability to generate cash flows across all time horizons, including the long term. And how does it interact with the financial statements? Management commentary complements the financial statements. Both portray a narrative about the entity, while each component of the financial statements contributes towards the story that the statement tells. It is the interaction between the statements and with the notes that help investors build a richer understanding of the entity. The same is true for management commentary. The practice statement suggests 6 content areas for management commentary, which are interrelated, reflecting those relationships and how an entity tells its story through management's commentary is an essential ingredient of a coherent narrative. As investors seek to build trust in management and believe in their investment case, it is also important for entities to present a coherent message that links management commentary to the financial statements. When inconsistencies between these both appear, investor confidence begins to erode. Sustainability report can provide a third narrative, although our expectation is that these would be embedded in management commentary, highlighting the key linkages. I will shortly explain the initiative of the IFRS Foundation related to sustainability report, but I think it's important at this point to discuss to what extent are the objectives of financial reporting, management commentary, as described by the practice statement, and sustainability report are aligned. Of course, the lens through which sustainability-related risks and opportunities are viewed varies, and we often hear discussion about single and double materiality, but using the concept of enterprise value reporting set out in the prototype climate standard published by the 5 leading organizations in sustainability and integrated reporting last year, we can see how well is the alignment in objectives. We can easily bridge from the board conceptual framework for financial reporting to the objectives of the management commentary set out in the draft practice statement to then enterprise value report. All 3 focus on the provision of information to providers of capital, future net cash flows adjusted for time and uncertainty, and value creation. The 3 reports have their own objective and at the same time fulfilling complementary needs. I said that this project is a review of the current IFRS practice statement, but actually this is more than just a review, it is a revamp, and it will be an important step towards better corporate reporting. If jurisdiction, that's a very important point that I would like to make, especially for the region, and I'm passing this message to other regions as well, is asking for jurisdictions start applying the practice statement locally, and on the top of that, requiring a level of assurance on it. That would make a big difference. Okay, moving to the next project, agenda consultation. There are many projects in the ISP agenda, and some of them are purely related to accounting issues. I mean, how to account for a transaction, and some are related to presentation and disclosures, and also with impact on corporate reporting as a whole, which is the case of these 4 projects that I have selected. The agenda consultation itself does not change accounting or reporting, but it is the document that shapes our work, I mean, the ISP work, for the next 5 years and further. And you might be asking who decides the projects the ISP should undertake. This decision basically made by the IFRS Foundation stakeholders, that includes investors, preparers, academics, regulators, auditors, you, basically all stakeholders. And how do we collect their opinion? We do it through our outreach, this kind of events, through our interaction with public in general, interpretation committee, which receives practical questions that might depend on the situation, end up giving rise to standard setting project, and then narrow amendment, or even helps to feed a decision for a major review. And we also, as part of this exercise, issue this document request for information or agenda consultation, where we ask our stakeholders their opinion on strategic direction and balances on the ISP's activities, the criteria for assessing the priority of financial reporting issues that could be added to the work plan, and new financial reporting issues that could be given priority in the ISP's work plan. Coming to the first topic, what are the ISP's activities? In the consultation document, we provide an overview of these activities and give an indication of the current level of focus for each activities. We are seeking stakeholders' feedback on whether the board should increase, leave unchanged, or decrease its current level of focus for each main activities, and undertake any other activities within the current scope of its work. In the document for each activity, you have a description of what the board currently does and examples of what more the board could do. Just to give an example for one of the activities, digital financial reporting. As we are talking about future of corporate reporting, some might believe these activities may need to be boosted, and we often receive calls for the board to devote more resources to consider the interplay between technology and financial reporting. Our current focus is on supporting the IFRS taxonomy, but also ensuring that new requirements are digital neutral. If we devote more resources to support the digital consumption of financial information, what is the most effective way to do this? For instance, improving the quality of electronic data, or perhaps greater consideration to how presentation disclosure requirements could be enhanced through a digital focus perspective. It depends and vary, and then we want to hear from you this feedback just to help us to make a decision. In the previous slide, I gave you an indication of the current level of focus for each activity, and we are estimating for the next 5 years the same level of resources we have today. Therefore, if we are asked to increase the resources allocated to activities that support digital financial reporting, for example, we may need to reduce the resources allocated to another activity, for example, reduce the number of new research and standard setting projects that we can add to the work plan. It's a clear trade-off exercise. Therefore, please keep in mind that when providing feedback on the overall balance of the board activities, we have to find the right balance between them. The second topic in our agenda consultation is related to the criteria we developed for assessing the priority of financial reporting issues that could be added to the work plan. The board evaluates a potential project for inclusion in its work plan primarily by assessing whether the project will meet investor needs, but also take into account the cost of producing the information. I mean, that just not looking at the investors' needs, but also the costs for the preparers. In this slide are the 7 criteria the board currently considers when deciding whether to add a potential project to its work plan. In the document, we ask whether you agree with the criteria and whether the board should consider other criteria. And in the third part of our request for information, we enumerated the most commented new topics in financial reporting, and we are asking you what are those that we should include and prioritize in the agenda. We have included 22 new topics. They are in alphabetic order, therefore please do not take this as a kind of the first will be the priority. It's not the case. Definitely alphabetic order to avoid this kind of judgment. And then we have these projects such as borrowing costs, crypto assets, inflation accounting, intangibles, other comprehensive income, and many other topics. If you believe the ISP should engage with a topic not listed in the document, please include this on your response and provide the arguments why you believe the board should undertake a project on it. We are also asking whether for this project that we are listing here, if you believe that you should give a high, medium, or low priority in our projects. If your major concern is with the future of corporate reporting, you may find some of these projects more interesting. For example, the project on intangibles. At this point, I would like to emphasize that the request for information also describes and sizes potential financial reporting issues that could be added to the next work plan. For example, just taking again the intangibles, a project on intangibles could have different scopes from medium size to large projects. Why am I emphasizing this? Before adding new projects to the work plan, we must have in mind few things. We have to finalize the projects underway in our current work plan. We have also set aside capacity for the required post-implementation reviews and any urgent project that may come up. What I'm trying to say is that just to manage expectation, the board's agenda does not start from zero. It is an ongoing agenda, and the board can and should take on new projects, but it has limited capacity. So it can only add a small number of projects to the future work plan. Therefore, when providing feedback through comment letters, online survey, or outreach, remember the board's capacity here is limited. Best to focus on projects where you have strong views. The agenda consultation document is open for comment until 27 September. And finally, constitution amendments. This is part of the sustainability reporting initiative of the IFRS Foundation trustees. Climate change and sustainability matters more broadly are urgent global challenges, heightened focus on companies reporting on these matters, reporting on sustainability increasingly important to capital markets. Whilst many good initiatives exist, there were increased calls for investors and others for greater comparability and more consistent application at a global level. The point is that the development and widespread mandatory adoption of IFRS standards fulfilled that role for financial reporting, and many have suggested the IFRS Foundation should play a similar role in sustainability reporting. As part of the 5 early review of the strategy of foundation, the trustees understood it could meet this demand. A consultation paper was published in September 2020. The responses indicate broad demand for global sustainability reporting standards and broad demand for the IFRS Foundation to play a role. Given this demand, the trustees decided in February to undertake further detailed analysis of feedback on the requirements for success and other conditions to be satisfied. One of the most recent steps taken by the trustees was to consult on changes to the IFRS Foundation Constitution. That's the project that was in one of our first slides. And this change is to expand the scope of the foundation to accommodate the potential formation of a new board within the governance structure of the foundation. This would be the International Sustainability Standards Board, ISSB, that would be responsible for the issue of IFRS sustainability standards. This board would be created to work alongside the ISB with different roles, but probably with strong interaction, as we probably might guess. It will be formed by 14 qualified board members, majority working full-time, with focus on public interest, with diversity in expertise and geographical balance. Hopefully, by COP26 in November, the trustees will have finalized the analysis of the feedback with the aim of making a final determination, including the composition of the board. We are just entering into the details of what we have at this moment, based on the feedback to the 2020 consultation and encouraged by the IOSCO board statement, the trustees reached the following views about the strategic direction of a new board. Investor focus for enterprise value. The new board would focus on information that is material to the decisions of investors, lenders, and other creditors. Sustainability scope, prioritizing climate due to the urgent need for better information about climate-related matters. The new board would initially focus on its efforts on climate-related reporting, while also working towards meeting the information needs of investors on other ESG matters. Building on existing frameworks, the new board would build upon the well-established work of the Financial Stability Board's Task Force on Climate-Related Financial Disclosures, TCFD, as well as work by the Alliance of Leading Standard Setters in Sustainability Reporting focused on enterprise value. The trustees will consider the prototype proposed by the Alliance for an approach for climate-related disclosures as a potential basis for the new board to develop climate-related reporting standards. To prepare for this work, the IFRS Foundation will initiate the process of structural engagement with these relevant organizations. And building blocks approach by working with standard setters from key jurisdictions. The standards issued by new board would provide a globally consistent and comparable sustainability reporting baseline, while also providing flexibility for coordination on reporting requirements that capture wider sustainability impacts. Okay, we come to the end of my presentation, and just to recap, I have selected 4 topics to present on this conference that, in my view, might have major impact on the future of corporate reporting. Disclosure requirements in IFRS standards, a pilot approach. I think this will be a game changer with the potential to solve what we call disclosure problem in the financial statements. Management commentary, this project is an important response to investors and creditors changing information needs to better assess a company's long-term prospects. Agenda consultation, it helps to determine the ISP's priorities and shape our work plan for the next 5 years and further. And finally, with the IFRS Foundation Trustees Initiative, we will soon have the International Sustainability Standard Board established and ready to set IFRS sustainability standards in order to meet the urgent demand on reporting in this area, bringing comparability and more consistent application at a global level. Thank you for your attention, and now I'll take the question raised by the audience.
Thank you, Todeu. I actually posed the first question that's inside of the Q&A. You talked briefly, obviously, that in the project timeline will be some work on the IFRS for SMEs, but could you elaborate a little bit more, because there is wide adoption of that standard within our region, and so it'd be good for the participants to hear a bit more about what's in the plan for the IFRS for SMEs.
Sure. First, we have 2 projects that are totally linked with the SMEs. The first one is the comprehensive review of IFRS for SMEs. This is an ongoing project. We have already had the information we needed to make decisions to prepare its exposure draft with changes to the current text of this standard. We have already discussed this with our implementation group, SMIG, in relation to what, based on the feedback received on the request for information document, where we should go. And in the second half of this year, we will probably start deliberating and probably preparing the exposure draft. The expectation is for the 2022 or maximum beginning of 23 to have an exposure draft with the proposals. But I said there is a second project as well, that subsidiaries that are SMEs. We will shortly publish an exposure draft on this one. It's a quite important project, especially for subsidiaries of multinational groups that are applying IFRS. Many times you have to apply IFRS full to send the information for consolidation purposes, but at the same time you are an SME and you could use IFRS for SME, and then you have an additional cost because you have to do the information in accordance with IFRS full, let's say. And then you have to choose whether you prepare IFRS full, and then you have the burden to have the financial statements with much more disclosures, or you have 2 sets of information, IFRS for SME for local purpose for your financial statements, and then IFRS full to report to the group account. What we are proposing is that if it meets this definition of SME and subsidiary of a group which is applying IFRS full, you can apply IFRS full, but with reduced disclosure that's very similar to what we have in IFRS for SME. Therefore, these two products are quite relevant for companies that are SMEs.
Thank you. What was interesting in your presentation is obviously users or preparers of financial statements do have their own concept of materiality. And I'm always curious as to if the guidance is a little bit more explicit to help preparers understand materiality in their concept. I'm an auditor, and obviously, auditors have lots of guidance as it relates to materiality for their purposes. But for the purposes of preparers, the guidance around what's material for me versus figuring out what's material for the users of my financial statements, I think sometimes is a vague concept. And whether or not there's going to be more guidance or more help to give to preparers around materiality for their purposes.
No, excellent question. Actually, we have just reviewed the IFRS practice statement number 2 on materiality. We also have made some changes to IS1 and IS8, all related to materiality. In the case of IS8, is related to material accounting policies. I mean that we are trying to, as much as possible, to try to deal with this issue, as you said. And one of the projects that I mentioned, that is the disclosure, the review of the way we draft disclosure requirements. In IS1, you have the requirement to exercise materiality judgment. But when we go for the standards individually, you have the disclosure requirements. And I was an auditor for many years. And my experience, for example, especially when you are in an IPO process, is that it becomes a compliance exercise only. I mean, it's just taking the checklist, being sure that you have included all the information. It is not relevant if it is immaterial. The most important that the information is there, then I can check the list. I mean, that isn't what is required in IS1, materiality, judgment, exercise. And people should be aware that if an information is not material, you shouldn't disclose that one. But unfortunately, the way that we write the standards, disclosure requirements, people are not looking back to IS1, just looking at what is in the standard, and usually disclose information that is material. Sometimes even to say that, oh, the company X has published this one, and then I have to publish this one as well. Yeah, but it is material for them, not material for me. Then I shouldn't disclose this one. And then what we are proposing is in this exposure draft is to try to convince management that they should do a judgment exercise. And how we are trying to help management to do that. We are including these standards also, the information the investors need, the information the investor needs to make a decision. Because once you know what the other part, the one that's reading your financial statements, is requiring in terms of information, it's much easier for you to determine what should be there. And then in this case, just coming back to your main point, original point, it is a point that the auditors and management should discuss this judgment. And I believe that, at least in my case, I would be much more comfortable because in many cases, you sometimes have a very important transaction in a quarter, for example. And if you just compare the note from one quarter to another, it's exactly the same note, as if that relevant event has happened, because it's just a compliant exercise without actually stop and thinking, oh, we have a material transaction here. I think that we should do something here. The most common situation is there is a deterioration in your liquidity, but there is nothing changing in the note about liquidity, for example. And then with the way that we are proposing to write the disclosure requirements, we will try to make management to exercise this judgment. And this will also help the auditors to tell them, look, this information should be there. because the way, again, we have in the standards, people are just saying that, okay, the information that I have to include, it is here in the standard. I have ticked all boxes, and then it is okay. I think that this proposal will help the discussion between auditors and management in relation to what is relevant to be included in financial statement. I mean, the main point is that explaining why the investor need this information, and then we have some flexibility the way that you disclose it, and then we hope that we will also make the information more effective, not necessarily longer.
Yes, I think we all would like some shorter financial statements, especially the users. I'm going to remind everyone that we still have time to ask Todeu any questions you have, but I'll pose my last one, which is around the process of standard setting going forward. So now that the trustees will have a board, a separate board that is looking at sustainability standards, is there a protocol or process going forward for standard setting? Will new standards be jointly done? Because I would assume that it, to improve adoption, it'd be easier to make sure that the standard meets the requirements of maybe what both boards are expecting as it relates to corporate reporting and sustainability in a standard, as opposed to if an entity wants to make sure that they are keeping up with obviously what are in IFRSs, and then obviously what's going to be the sustainability standards, that they don't have two sets of standards that they have to reference as they're preparing for financial statements.
It's a good point, Lisa. If we just start talking about how many things needs to occur before companies applying the first IFRS sustainability standard. I'm just thinking, for example, that why IFRS Foundation is assuming this role, because of its structure, well-established due process. And then, first of all, it's supposed that any IFRS sustainability standard to be issued will follow the due process, and we expect that each jurisdiction will, similar to what we have for the IFRS standards, will contribute with comment letters and etc. And then comes to the second point, is that we issue the standard, but IFRS sustainability standard, the ISP, but we still need to have jurisdictions determining that companies should apply that one. Of course, we still can get some companies applying on a voluntary basis, but the big change will be when jurisdiction will start requiring these standards to be applied, and then they might have their own endorsement process once the standard is issued. And similar, any information that eventually the sustainability standard, we, in this interaction between the two boards, realize that it should be better, or should be actually not necessarily better, it could be in both places, but should be in the financial statements. We will probably need to make sometimes change. No, these belongs to the financial statements as well. Just to give an example, because the first project that we are working is on climate-related climate change-related issues. But it's okay. And we probably need to think about situations where actually the information may have impact on the financial statement, then should be there, not only the sustainability report. That's, in my view, would be the biggest interaction between the two boards. And in relation to the implementation of the IFRS sustainability standards by the companies, as I said, it will depend on the engagement of each jurisdiction, and also regulators, especially enforcing the application of these standards. And I believe that this is going to happen quickly, because one of the biggest supporters of all these projects is the IOSCO, that is actually the regulators of the capital markets in different countries. And then I suppose that this is going to happen in the 2 or 3 years, and then we will have this process already ready for at least first standard applied.
Okay. Thank you very much, Todeu. And actually, that is good for us to keep on our radar as ICAC, as the umbrella body for the PAOs in the Caribbean, who themselves are the regulators, and for them to have a discussion about how we in the Caribbean can take on board the standards and how we should adopt them as we go across the Caribbean. So I want to thank you very much. It was interesting. And again, it's always good to know what the IASB has on its agenda, and understand how it might impact us in the Caribbean as preparers and auditors of financial statements that are in compliance with IFRS. I want to encourage our professional accountants across the Caribbean to get involved in the process as it relates to providing feedback to the process. There are exposure drafts that are being shared with us throughout the year. There are comments that are being requested of us. And the only way for us to make some impact to make sure that standards are relevant to us is to make sure that we are involved in giving that, sure that we get on board with the process. So Todeu, thank you very much. All the best to you and have a great weekend.
You too, Lisa. Thank you. Thank you. Good weekend for
Okay.
all.